What's up, everyone? All right, you guys are in for a treat today because I'm going to break down for you the indicator that I use to find stocks that have home run potential. This is big. It's relative volume. And during this video, I'm going to show you some of my metrics. You'll see that I have over $3.3 million in profit in the last 3.5-4 years of trading. And almost 98% of it comes from stocks that have relative volume of 5 or higher. So what is relative volume? How do you find out what number it's at? Is it 4? Is it 5? Is it 10? Is it 100? I'm going to break that down for you right here in this episode. Now, for those of you guys who go through this whole video, what you're going to learn is that this is focused specifically on stock selection, how to find stocks that have home run potential. But what do you do once you find a stock that has home run potential? Well, you need to know where to get in and where to get out. You need to know the tools to use, the platform, the scanners, everything else. And so, because I don't want this video to be 6.5 hours long, what I'm gonna do is I'm gonna put a link right down below for my beginner's getting started kit. Now, that kit will expand upon what we're gonna talk about here of relative volume and how I use that for stock selection, and continue with an analysis of risk management, profit loss ratios, and finding low risk entries that minimize your downside risk while maximizing your upside potential, which is what we really all wanna do as active day traders. All right, so I hope you guys enjoy this video. I think you really will. Leave questions and comments down below, and make sure you check out that link to download my beginner's getting started kit. And I'll see you guys first thing on Monday morning, live streaming right here on YouTube, my pre-market watch list. And if you haven't already hit that subscribe button, make sure you subscribe. That way you'll get the notification when I go live right around 8:45, 9 o'clock. All right, enjoy the video, and I'll see you guys for the next episode. What's up, everyone? All right, so I was just looking through YouTube comments, which many of you guys know. We get a lot of comments on YouTube, and I try to go through all of them, and at least for the first comment, give a little answer. So one of the common themes that I've been noticing in YouTube, Facebook comments, and even in email, are traders asking, two things. Number one, Ross, what is your number one favorite technical indicator? If you could only use one, what would it be? So I'm going to answer that question, and I'm going to at the same time answer a second question, which is, Ross, how do you find these stocks before they make the big move? This is, it's crazy. I mean, day after day, you seem to find the big momentum stocks. How do you do it? So today's a day where I'll put my P&L up here again, so you guys can see where I'm at. I'm up $35,000. Not bad. Not as good as I was just before my last trade on WIMI, where I lost, 8,000 or so. I was up over 40,000 today. But in any case, 35,000 is still a really good day. So how did I know that WAFU and WIMI were going to be stocks worth trading? So on the first question of my favorite indicator, or if I could only use one indicator, it's kind of like asking a question of, if you could only have one arm, which arm would you use, or which arm would you choose? I hope that I'm never in the situation where I have to only choose one indicator, because the reality is I haven't been presented with that situation yet in all my years of trading, and I don't see a scenario where I would. I understand the value of keeping your charts really simple as much as you can. And so for that reason, I don't use a lot of indicators, but I would say on my actual charts, from an indicator standpoint, you can see all I have here are moving averages, the volume weighted average price, and then this yellow line, which indicates today's open. That's all I have. So as far as those indicators go on my actual charts, those are pretty similar, or pretty simple. But for me, probably the biggest indicator that a stock is going to have the potential to make a big move is relative volume. So I would say that is probably my favorite technical indicator, although it's not one that you put on a chart. It's an indicator of a stock trading on above average volume, and in my opinion, with the potential to make a really big move. So, and let me just open up this window here. I got let's see, I logged out of this window by accident. So you guys can see, there we go. So back in the chat. All right. So you guys can see WIMI here. This is the chart. So let's go back and look at this and kind of break down the relative volume and what is relative volume. So relative volume is a measurement of today's volume versus what is normal for that stock. Now that's really important. I don't search stocks. I could go up here to a new top list window and I could say volume, and I could look at volume leaders, load settings, and I could look at the stocks that have the most volume today. And you would see that NIO has the most volume today at 140 million shares. Now, WIMI does come in second at 43, and then OGen is third, SQQ is fourth, PSV, American Airlines. I don't look at the total highest volume stocks. If we pull up NIO, while this has high volume today, in fact, its relative volume is low. So what is the relative volume for this stock? Well, let's actually go and we can go into properties here or collab. No, it's not that. Hang on, I'm just going to add the column. Configure columns, and we're going to add relative volume ratio. Okay. So the relative volume today is 3.34. All right. Whereas the relative volume on WIMI is 1,403. So WIMI, if we sorted by highest relative volume, we would see WIMI, SPAQ, PSV, and WAFU. All right, and all of these have over 100, a relative volume of over 100. So relative volume, in contrast to total volume, compares the volume today to what is normal for that stock. And it's over a set period of days. And I don't know if different platforms might use a different number of days, whether it's 14 days or 30 days. I'm not actually entirely sure, but it's the average volume over a period of time. And so NIO, or NIO, whatever you want to call it, in fact, today has much lower volume than it had 2 days ago or 3 days ago. But compared to the volume that it traded on a month ago, it is, as you can tell for sure, high relative volume from a month ago. But again, just because this has a relative volume of 3, in my opinion, is not high enough. What that tells us is that the volume is 3 times higher than what it was during this previous average from 30 days ago. In contrast, WIMI, with the leading volume, although I struggled with it a little bit, and you can see that it's red today and it's kind of been choppy. I was green on it, and then I gave back my profit doing a sort of dip trade in this area. So anyways, but the fact is, this was the right stock to be watching. It had how much volume yesterday? 1.3 million shares. And how much volume today? 43 million. And it's only 10:42. So it's still early in the day. By the end of the day, this might have 75, maybe even 100 million shares of volume. So as the day goes on, I mean, the volume is just going to keep increasing, and the relative volume is just going to continue to be tremendously high compared to the previous day. So how did I know that this would have high relative volume? Well, pre-market, when I sat down and I looked at my gap scanner, so this is the scan that I run, and you can run scans like this in a lot of different trading platforms, but this was the scan that I was running, and I saw, let's see, we'll do time frame, historical date. I'll run this for like 9:20 a.m. All right, so 9:20 a.m. WIMI was up here. Now, it doesn't actually, this software doesn't actually populate relative volume pre-market. So you can't actually see what the number is, but I was able to see that it had 12 million shares of volume, and I was able to look at the chart and just eyeball it and realize, wow, it's already a relative volume of 10 versus yesterday, meaning it has 10 times more volume than it had yesterday. And now the relative volume versus 30 days ago, or whatever the case is, may even be clearly higher than that. So it's a comparison of the volume today versus what is normal. So why is relative volume such an important indicator for me in telling me the stock has the potential to give us potentially a home run? Well, relative volume, a stock trading on much higher volume today than what is normal, indicates that something special is happening with this stock. And in my opinion, it shows us, there's only a handful of stocks each day that have really, really high relative volume. And of course, today, WIMI and Wafu were both on the top of the list. Both of these stocks had a reason to make a big move. And the relative volume tells us that most likely a lot of people are watching this stock and trading it today that were not interested in it yesterday or the day before. So, in your opinion, what would allow a stock to have 1.3 million shares of volume one day and the next day have 44 million shares of volume? This is outrageous. Let's look at a few other stocks. Look at the volume spikes. So from 2.4 million shares of volume to 58 million shares of volume 2 days later. Let's look at UONE. This was a big one from last month. So from 300,000 shares to the next day, 25 million. The day after that, 43 million. 2 days later, back to 58 million. So how does that happen? It's the result of typically breaking news. Now, UONE doesn't have news today, but let's look at WIMI, for instance. So WIMI has news today. It was posted at 5:31 a.m. Now, I don't go searching the news and get up at 5:31 in the morning to check to see every stock that has a headline. Because you know what? I mean, I can just pull up almost any stock and you'll see S&P has headlines. You pull up, American Electric Power. I mean, you could just go through stock after stock after stock and you'll just keep seeing headlines. So searching for headlines, I can move the video. Well, I can move the video to the side here. So searching for headlines, in my opinion, is not really, it's not a good use of time. What I want to look for early in the day, as early as possible, 8:45, 9 o'clock. And so that's not as early as possible. You can get up at 4 in the morning, but usually kind of 30 minutes before the bell. I like to start to look at which stocks are gapping up the most in the market. And then I check it and I say, well, what's the reason it's moving up and what does the volume look like? The reason it's moving up is a catalyst. And I don't need to go and read all this catalyst information and go and do research on 5G holographic applications. I don't need to do that. I can see just by looking at it that there is a fundamental catalyst that is driving the price action. That's creating this interest in the stock, which started, as you can see, initially not a lot of interest down at 4 a.m., 5:30, but starting at about 7 a.m., it started getting picked up, and traders obviously started buying it as it squeezed higher, and it hit a high of 7, pulled back up to 750, pulled back. And so at this point, when I started looking at it, wherever this was in here, clearly it was already moving up. It already, no doubt, was going to have probably the highest relative volume today out of any stock in the market, and in fact, it has. Now, that doesn't guarantee that it'll be easy to trade, because this is the strategy that I use for finding stocks to trade, and my accuracy is about 68 to 70%. So, today my accuracy, I guess you could say, is 50% on the two stocks, but in all the trades I took today, my accuracy was probably 68, 70%. I had some winners on WIMI, then gave back some profit. I had a bunch of winners on Wafu, but also a couple losers. So generally, although I'm not going to be green on every single stock, this is still a really good way of finding stocks that are worth trading. And then ultimately, once you find a stock that's worth trading that you think has the potential to make a big move, then the question is, what's your entry and exit? How do you manage risk? Because it's not enough just to find the stock. You need the strategy to put it together. And that's what, of course, the Warrior Starter and the Warrior Pro classes are all about. It's about teaching you the fundamentals of trading and helping you understand the strategy. So, of course, we have stock selection, which is chapter 2 in the starter and chapter 3 in the pro classes. And then from there, we go into breaking down your daily charts, understanding why not only is it important that this had high relative volume, but it also had no upside resistance above this level of 6. However, the float at 6 million shares here, in fact, was not accurate. The float's a little bit higher. I think it's closer to 20 or maybe even 30 million shares. And certainly this one was a bit choppier than I expected it to be. It is also easy to borrow. So sometimes stocks are easy to borrow. You're going to see a lot more short sellers trading into the short side. No short sale restriction or anything like that. So again, those are more of sort of the nuances that I would apply once I identify that a stock just on the surface has or will have high relative volume. Now, if we look at Wafu, the relative volume on that one is 114. Now, this one's kind of interesting because it was had a move that started yesterday after hours on news about, it's a Chinese company and they do, I guess, online sort of digital education. And so the news that Chinese schools are closing, that had given kind of a spike of momentum to some of the companies that are in this space. And so that started to pop up yesterday and was continuation today. So that's an interesting catalyst, because although it appears that there's no news specific to the stock, in fact, it's in this case, more of a global type of headline, and that did give some opportunities that began pre-market and then continued with this nice red to green move from $7.82 up to $9.10 or whatever. So for me, relative volume is much more important than total volume. And there may even be times where I'll see a stock on the scan, let's just say, for instance, I don't know, let's just say MATX, just for instance. So I might see, oh, well, it's got 19,000 shares of volume. And typically you would say 19,000 shares of volume, that's very light. But, we pull up the stock, it is up 24% on 19,000 shares. And so I might look at it and say, all right, well, what does the chart look like? All right, what is the headline? What's the daily chart look like? And how much volume did it have yesterday? Because this actually has high relative volume today, although it's not as high as some of the others. Let's see, I'm not sure if it's even on the top of this list. I can sort alphabetically. Yeah, it doesn't look like it's even made the cut here on probably the top 100 or so. But in any case, you can tell that it does have a little bit more volume. So although it had light volume pre-market, that doesn't necessarily mean I wouldn't consider it, because what I'm looking at is what is the likelihood that this will have high relative volume? How much is it gapping up? And the question really is this going to be an obvious stock to trade? Is this going to be one that people look at and they're like, wow, this is the one? And I thought that would be the case with WIMI. And it usually is the case that either the leading gapper or the second or third leading gappers are the obvious ones, right? That everyone's looking at. That is just like, and that's important, because in my opinion, some people would disagree with this, but I think it's good to be kind of trading with the pack, or with the herd, so to speak. And maybe for institutional traders, the herd has been focusing on Tesla, on that sort of, higher price range. As this just goes higher and higher and higher and higher. And maybe on Amazon as it goes higher and higher and higher and higher. So as a small cap trader, and for traders that have smaller accounts, usually the leading percentage gapper is the one that traders are going to focus on, because this is going to be relatively affordable and have the potential, if it works well, to squeeze up 20, 30, 40%, maybe even higher, as we've certainly seen with some of these stocks. Like PSV here was gapping up 70%, although it's a little on the cheaper side. It already had 4.3 million shares of volume pre-market. So let's look at this on the daily chart. How much volume did it have yesterday? It had 1.4 million, and today it has 35 million shares. So it is our second highest relative volume stock today. Again, not total volume, but relative volume. So a lot of people are watching this stock today that weren't watching it the previous day. And that means, because you have a lot of eyes on it, that traditional patterns, such as the first candle to make a new high, will be well respected. Topping tail dojis will be shorted. A breakout over 115 here would be very probably widely considered an entry for a move back up to 129. The volume weighted average price will be well respected. So if you're going to trade these traditional patterns and use these traditional indicators, the only reason that they work is because people believe in them. People believe the VWAP is going to provide a level of support, therefore they buy at the VWAP, right? And people are maybe cautious on shorting right at the VWAP because it's shorting right onto support. The only reason the first candle to make a new high works so well is because people respect it and they see that as an opportunity. So if you're trying to apply those types of patterns to a stock that nobody is trading and no one has interest in and nobody is watching, you will not get predictable resolution. Resolution to patterns becomes predictable when you're trading the right type of stock. And that is a stock that has high relative volume. And so one of the biggest mistakes that beginner traders make, they'll say, oh, well, NUGT, let's look at this. This doesn't have a lot of volume today, but let's just say they're like, oh, well, this has a lot of volume. It's got 1.1 million shares, and it's kind of curling up and breaking the VWAP. Maybe I should trade this. The relative volume on this is a fraction of the previous day. Traders are not watching this. If you're trading this, you're off in the weeds. You're all by yourself over here because What's mostly trading this, I would guess, would be maybe high frequency trading algorithms, some institutional trading, but not very many day traders are looking at this type of stock today. Again, American Electric Power. You pull this up, what an obscure stock. Who's day trading this today? Not a lot of people. And in the news recently, I've certainly heard, Jim Cramer and some of these, very well-respected people in the industry saying that, day trading is incredibly risky and it's going to end in tears for everyone. And Leon Cooperman and some of these other big hedge fund people are, day traders, they're essentially just criticizing us as being stupid, and that we're buying stocks like American Airlines. Warren Buffett, yeah, he was smart to sell it because their balance sheet is upside down, but meanwhile, hey, go on outside, girl. But meanwhile, day traders have no problem buying it as it squeezes up right here, creating this surge from 10 all the way up to $22, right? Hey, girl, come on. Outside, go on, out you go. And I find that, obviously to be a little insulting because, the fact is, although if someone bought this, with the intention of it being an investment and hoping it's going to go back to $50 and now they're underwater, okay, that obviously would have been the wrong approach. I mean, it's back down to the lows. But the fact is, Warren Buffett didn't trade or invest in Amazon. And the PE ratio of Amazon for any logical investor would have said, even at $2,000, it was crazy overpriced right back here. PE ratio was out of control. And here we go, it's up to 3,000. And so, although stocks can be irrationally strong or weak compared to their balance sheet, compared to their book value, which is the value of all their assets, Warren Buffett, value investors, they like to buy stocks that are actually trading below their book value. So their book value is the value of all their fixed assets, all their equipment, everything else. So if a stock is trading below, the actual, book value of the company, that can be a great investment. Okay, it can be. But stocks can be priced irrationally for very long periods of time. And, here you've got Carl Icahn, who's been holding a position on OXY for, over a year. He's got billions of dollars in it. And, look at this thing. It's been really not a good, although maybe it made sense from a fundamental perspective for a variety of reasons. From a technical perspective, it's been weak. And so day traders, short-term traders can capitalize on those opportunities. And again, I'm not trying to criticize the big investors. They're much more successful than I'll ever be. But they have a different place in the market and they have a different strategy. And I don't think it's really totally fair to criticize day traders or say, day trading should be outlawed. These because they're so stupid because they're buying stocks with terrible fundamentals or terrible book value. Yeah, well, here's a stock that maybe had good book value and still dropped 70%. Or here's a stock that had outrageous, had book value that is a fraction of the current trading price, but still went up another 50% or another 100%. So there are opportunities. And that's what we're searching for as day traders. And so in my opinion, what we have to look for are stocks that have high relative volume, that have really strong daily charts, and that generally have some type of catalyst to justify the move and then to ride that momentum. So we all have a place in the market, and so our place in the market as active day traders is capitalizing on these short-term sort of imbalances in price and the volatility that we see on a very short-term basis. And so for me, I really don't spend a lot of time reading quarterly earnings or going through all the fundamentals, because the fact is, although long-term you would think it'll probably matter, short-term, as a day trader, it really doesn't matter. Short-term, we have to be focused on technical analysis. And so that's what we do. And so I would wager that, as a day trader, I probably can read very short price action a lot better than someone who focuses just on the fundamentals. But the downside to what I'm doing is that you can't really move in and out of the market with, $150 million as a day trade. And so that's why those big investors would just say, well, day trading's, it's kids play. What are you making? 200,000 a year, 500,000 a year, $1 million a year if you're good? That's a joke, right? They're trying to make hundreds of millions. And I get that. So we all have a different place in the market. We all come into the same market, but we trade it in different ways. We have different risk tolerances, different account sizes, and different goals. So the set of criteria and my number one indicator for finding a stock that has what I think is home run potential in the course of like a couple of hours is going to be very different from the criteria that a big hedge fund manager or whatever would look for a 3-month to 6-month type of position where they're putting tens of millions or hundreds of millions of dollars or billions of dollars at risk. And so, of course, I would say that my strategy is probably much more appropriate for the average person because it is a strategy based on really minimizing risk, not holding stocks overnight, taking short-term trades, getting in, getting out. And so we could have on a stock a 5 or 10 minute long opportunity. Look at this. This has gone from $13 to $20 today. That's almost 50%. Now, I didn't trade this one, but the fact is, the relative volume today, let's look at it. So the relative volume today on it, yesterday's volume was 400,000 shares. Today's 2.3 million. So it is 4 times higher volume than yesterday. This is a bullish engulfing candle on the daily chart, but it has an absence of news. And so that would certainly make me cautious. I believe this is one of the companies that we traded a couple weeks ago. But in any case, so although it's a former momentum stock, which sometimes by itself is enough because traders will say, hey, this stock was really strong 2 weeks ago. Right now it's up a lot. I'm going to jump in. And so sometimes, that can work, but it's still going to be a little bit less predictable, in my opinion, without that news catalyst. And now here's WIMI. So coming back up and attempting to break the VWAP again. That VWAP is going to be very well respected. This is going to continue to be the highest relative volume stock on the market today. It's not going to get beat out by the end of the day. It's going to be the highest. What are the obvious levels? The obvious levels on something like this right now would be the high here. If it breaks 845, then I would look for a move up to 925. And because it has high relative volume, tens of thousands, maybe hundreds of thousands of traders out there have lines drawn at the exact same places, because they're obvious. And that's what you want. You want obvious, because that means what happens there should be predictable. Now, of course, again, sometimes you'll have something that is unexpected, and I suppose that happens, 30% of the time, which is why I'm right only 68, 70%. But I'm still right more than I'm wrong, and it's 100% because I focus on stocks with high relative volume. So let me back this up with some numbers for you guys. Just because some of you are probably curious, okay, how much does he really make on high relative volume stocks? So let me log in here. All right, so I have my metrics here, and this is from like the last 4 years or so of trading. And what I'm going to do is I'm going to show you my profitability by relative volume. That's kind of cool, right? So here we go. So this is my profitability by relative volume, right there. So that's $3.1 million trading stocks that have at least a relative volume of 5. 500% would be 5 times higher than what's normal. 3.1 million. And this is in like 4 years of trading. So everything else is on stocks that have much, much less relative volume. So where do I make my money? By finding the stock each day that I think will have relative volume. And I can certainly jump into something, like WIMI on the early side and already see at this point it already had 10 times relative volume. It was already moving in the right direction. And so even though it wasn't maybe this high at that point, I was able to, with reasonable certainty, predict that this would have the highest relative volume today. And that's where the challenge comes in, because it's not enough to find the stock after the fact. You have to find it before it happens. Now, this is kind of interesting right here. This is performance by the prior day relative volume. And so what would you speculate would be the reason that we would see this kind of curve here? This is due to continuation. So the majority of my profit is on stocks like WIMI or WAFU that have much higher volume than the previous day. However, a good portion is also on a stock like this, which would be continuation. So this here, the second day, I mean, this might have been maybe in this area here, because this looked like about 2 times relative volume on the second day, but it certainly wasn't as high as the day over day right here. And then there'll be some instances where it's even less than that. So AIHS, we traded this one 2 days in a row. So I traded it on this day and I traded it again on this day. So on this day, the relative volume was actually a little bit lower than the previous day. It was still a continuation setup, and it was still high relative volume versus, a week ago. So both of the trades would have fallen into this column right here, or this, this column, this section, just because they both, on both days, it had high relative volume versus the, month ago or whatever it is that's basing today's relative volume. Because today's relative volume as a calculation is not based on yesterday. It's based on the average over 30 days, right? Or 14 days. I don't know exactly, again, what the time. This actually says it's over 50 days, which is fine. So, but then this one, so then there's that one there, and then this one's versus the previous day. So again, that's the cause for this sort of discrepancy here, where my performance is almost always on the stocks that have at least 5 times relative volume, but not always 5 times versus the previous day because of continuation setups. So, that right there is the proof. The proof is in the pudding there, that is the way I find stocks to trade, day in, day out. It's by looking for stocks that have high relative volume. And again, my accuracy, you can see right here. So my accuracy is 71% right there. I mean, that's pretty good. It's not perfect. And this is, day trading and meteorology are the only jobs where you can be wrong 30% of the time and still get paid pretty well. I guarantee you, you're not going to be able to do that as a pharmacist. You can't be wrong 30% of the time and sometimes give someone blood pressure medicine and sometimes give them, Xanax, and sometimes give them, whatever else, some antibiotic. You can't be wrong 30% of the time as a pharmacist. It's not going to work. You're going to get fired. You can't be wrong 30% of the time as a surgeon. But in the field of day trading, you can be wrong 30% of the time and still make money. And that comes down to this right here, which is your average winner versus your average loser. And so my average winners are about 1,000. My average losers are about 1,000. So we would call that approximately a 1-to-1 ratio. I make 100 and I lose 100 on average. I make 1,000, I lose 1,000 on average. So it's about 1-to-1. Those aren't the best metrics in the world. A really good trader might have closer to 2-to-1 or 3-to-1 average, but 1-to-1 is okay. So if I make 1,000 and lose 1,000, what is my break-even point? 50%. So as long as I'm accurate and right more than 50% of the time, I make money. Now, if my profit-loss ratio was 2-to-1, and my average winners were 2,000, and my average losers were only 1,000, then I actually would only need to be right 33% of the time in order to break even. Oops, I gave that 3 an extra little squiggle. But again, it's nice to set the bar low and make it easier for you to be successful, but this is kind of a decision that you have to make because, for instance, and this gets a little bit away from relative volume, but just to touch on it for a moment, again, relative volume is my number one indicator for telling me whether or not a stock has a potential to make a big move. But then once I've identified the relative volume, now I've got to actually take the trade, right? I've got to execute on the trade. So WAFU right here, this was an entry that I took as it squeezed up right here to do a red to green move. So it was red on the day and then it curled up and went green. And as you can see from here, it went from about 780 up to 825, 850, 875, 9, all the way up to almost $9.40. Okay, so that was that short-term little squeeze right there. Now, one of the things with this is there's 2 ways you could trade this. One way, and maybe even if we look at this this little pullback. So one way would be, you're long right here at 8, and you believe with pretty high level of certainty that this thing is going to rip through 825. So it squeezes up to 810, 815, and you sell the whole thing at 820. All right, that's only 20 cents a share. All right, so you made 20 cents a share, and then it goes all the way to 9. You're like, wow, I left a lot of money on the table. But it's not as hard to predict a 20-cent move. And so if you took profit every time you were up 20 cents, you know what? Your accuracy would be pretty high, because there'd be enough times where it did go up 25 or 30 cents and then came right back down to break even, like it did kind of right here. First 1 minute candle to make a new high, well respected. It pops up, it does not break back over the highs, drops back down. But if you were aggressive, you still could have made money on that trade, and you could have made money on this trade right here. You could have been profitable on both of them if you were quick about taking your profits. The result would be very high accuracy, but lower average winners, therefore lower profit to loss ratio. And the other way would be to say, I'm going to buy this and I'm not going to sell it at 820. I'm going to hold the whole thing looking for the break of the pre-market high of 850. And I want it to break that level, so I'm not going to sell any until it hits 9. Well, for every one time that it goes all the way from 8 to 9, you get a full $1 a share. There's probably going to be 5 other times that it goes up to here and then comes back down to break even. And so when you swing for bigger trades, your accuracy goes down because you don't take the quick profit off the table when you have it. And so although your profit loss ratio goes up, your accuracy goes down. And so at the end of the day, I feel better having high accuracy because it makes me feel more confident. And even though it hurts my profit loss ratio a little bit, my biggest winner is 38,000. My biggest loser is 18,000. I don't like having really big losses, but unfortunately it happens sometimes. And then that draws down my average losers to the point where I really only have a 1-to-1 ratio. But again, by focusing on the right type of stocks, the setups that I consider to be predictable will respond in a more predictable way. If you told me right now, Ross, starting today, you can't trade any of the top 10 leading relative volume stocks each day, what would that do to my strategy? I would have to start making the money on these ones down here. I would have to start trading stocks like Apple. I'd have to start trading stocks that have a decent amount of volume, even though their relative volume is low. And you know what's going to happen most of the time you try to day trade stocks like these? Choppy, choppy, choppy. So again, for a lot of the students that I've known over the years who have struggled, a big part of it has been that they start focusing on stocks of companies or shares of companies that they know and are familiar with. And they like the idea of trading Nike or trading Apple or trading Facebook or whatever the case is. But without that relative volume, the patterns aren't predictable. And so technical analysis really doesn't work in the way that you would hope it would. So relative volume leads the way as far as, in my opinion, technical indicators for helping predict potential home runs. It's not going to work 100% of the time, but for me, it works more often than it doesn't. So I hope this has been helpful for you guys. This was something that I kind of wanted to work on after seeing some comments about how I find these kind of big movers every day. So the answer is I look for the relative volume, and even though there's not an actual metric for relative volume, I could add a relative volume column here, but nothing. It would just show blank pre-market. I can still, with a reasonable amount of certainty, just eyeball it and look at the daily chart. This trade with 1.3 million shares yesterday and today pre-market at 9:15 already has 12 million. Yeah, that's high relative volume. All right, so that's really all it is. That's the first step, finding the right type of stock to trade. And again, for those of you guys that are watching this, that may be watching on Facebook or YouTube, if you want to actually learn not only how to find the right type of stock to trade, but where to get in and where to get out, that's what you'll learn in the Warrior Starter and the Warrior Pro classes. So keep learning, keep studying, and as always, if you have questions, feel free to leave them below.
And that right there was an entire video with no ads. I don't monetize my YouTube channel with video ads, which means you guys get to enjoy the content. But do me a favor, please hit that subscribe button and give me a thumbs up and let YouTube know that this channel is the channel to watch if you want to learn about day trading.